Life is good on the farm. This is a picture of my wife's great grandfather and his three daughters. That is a Fordson tractor. Fordson tractors became available for sale in the United States in October of 1917. The picture is dated 1918. And so I'm assuming that's a brand new tractor, and most likely his very first tractor. Life on the farm was good in 1918. Life on the farm in 2021 was good as well. Net farm income up 23% versus a year ago. Net farm income here in the US up 47% in the last 2 years. US farmers still got 20% of his income in the form of a government payment, but that was down from almost 40% of 2 years ago. Iowa land values up an incredible 29% in this past year. Life on the farm's been good, and I anticipate life on the farm in 2022 to be good as well. There's a lot of positives out here. We still have strong demand. There's some production concerns in South America that's supporting the markets. China's still buying large quantities of ag, just not quite as much as they did a year ago. We have strong biofuel demand. COVID fear is slowly dissipating, and the world is slowly figuring out how to live with COVID. My concerns, of course, Ukraine and Russia. U.S.-China relations remain tense, maybe not as tense as they were a year ago. There's still $13 billion worth of ag goods that China agreed to purchase under the Phase 1 trade agreement that they fell short on. U.S. officials have still got to figure out a way to deal with that. And my biggest concern of all is inflation, especially food and energy inflation, because that is continuing to widen the gap between the haves and the have-nots. China has a zero COVID policy. That is a concern as well. Should there be a large outbreak of COVID across China due to their zero COVID policy, that could play into the supply chain disruptions. And I'm afraid that Biden and Trump will both run for president in 2024. U.S. corn ending stocks pegged at 1.54 billion bushels. Now, tomorrow, the USDA will release updated supply and demand numbers. So all these data that I show you here this evening, that will get changed slightly in tomorrow's WASDE report. But in the January report, they had corn ending stocks pegged at 1.54 billion bushels. The average trade estimate for tomorrow's report has stocks falling to 1.498 billion bushels. Stocks to use ratio at 10.3%. Now, the question going forward is, does this corn ending stocks number get larger or smaller as we move throughout the marketing year? I am fairly comfortable and confident that this corn ending stocks number does not get any bigger. How much smaller it gets is going to largely hinge on exports, and I'll talk about those here in a little bit. The USDA is estimating our corn usage for feed will be up almost 50 million bushels versus a year ago. The USDA has our corn feed usage number up 50 million bushels versus a year ago. And our first quarter feed usage was actually down 3.7% versus a year ago. Now, you could take this data and make an argument that maybe the USDA is overstating the amount of corn that we're going to feed in the US this year. I am not ready to make that statement yet. I want to wait until we see the second quarter feed data before I make a hardline projection on that. Corn use for ethanol production up almost 300 million bushels this year. Our weekly corn grind rate has been consistently running above what's needed to meet the USDA target. I think at the end of the year, our corn usage for ethanol production will be up 50 to 75 million bushels from where it's currently estimated at. There are some people who think it could be up as much as 100 million bushels. U.S. corn exports, and this is the wild card. U.S. corn exports are estimated to be down 12% versus a year ago. The USDA has our corn exports estimated to be down 12% versus a year ago. And our year-to-date corn export inspections are down 14% versus a year ago. And our export sales are down almost 20% versus a year ago. Now, you certainly could take this raw export data and make an argument that the USDA is overstating the amount of corn we're going to export out of the U.S. this year. Today, the U.S. Census Bureau released export data for December. U.S. corn exports through December is actually up 148 million bushels versus a year ago. What's this tell me? This tells me, we've got to back up here. The year-to-date corn exports are 148 million bushels larger than the inspections data. Now, what does this tell me? This tells me that the inspections data is maybe not that accurate this year in gauging what corn exports are going to be. And I think a large part of that is it's struggling to account for the corn that's moving across the border into Canada. And there's a lot of wild cards here in the U.S. corn export arena. And Canadian corn imports is one of them. China is always a wild card. Of course, the size of the South American corn crop's going to determine potentially what U.S. exports will end up being. And of course, Ukraine, Russia situation. This is probably the first time in my career I have talked about Canadian corn imports. It's important every year, but this year it holds more significance. Canadian corn imports are projected to be up 108% versus a year ago at a record 3.3 million metric tons. I can make a strong case that Canadian imports could be as large as 5 million metric tons. And if that is correct, that would be an additional 67 million bushels of U.S. corn export business. Canada already has 3.3 million metric tons of corn, of U.S. corn on the books, and there's still 7 months left in the marketing year. So I think I'm fairly confident, and you may see it in tomorrow's report, that you'll see Canadian corn imports be increased at some point going forward. China corn situation. China's pegged to import 26 million metric tons of corn this year. That is down 3.5 million metric tons from a year ago. Still a significant large amount of corn. However, China's ag minister is projecting their corn imports to be 20 million metric tons. And last week, a USDA Hitachi estimated their imports to be 20 million metric tons as well. That's a 6 million metric ton difference, and that's pretty significant. Last week, USDA Dr. Fred Gale, he specializes in China and Asia. He released an article out there on a blog spot titled Grain Corruption and Error in the Granaries. And the theme of the article had to deal with fake reporting and phony transactions within China that really makes you question what is the true size of their grain inventories. My personal opinion is China's grain inventories are not as large as their data says it is. And I also believe that China will be a fairly large importer of corn over the next several years. Brazil's corn situation. USDA had their crop pegged at 115 million metric ton. The average trade estimate for tomorrow's report has it at 113.3 million metric ton. Brazil corn exports pegged at a record 43 million metric tons. One thing that I want to point out about this chart is the bars that I have highlighted green. Those are years where Brazil has had significant corn production issues. And in every one of those years, U.S. corn exports increased from January to August. And in 2015-16, our exports from Jan to August increased 200 million bushels. In 17 to 18, they increased 500 million bushels. And in 2021, they increased 200 million bushels. Now, I'm sure everyone's been hearing about weather concerns in southern Brazil and Argentina. It's way too early to make the claim that Brazil's going to have a disaster in corn production. Remember, Brazil grows 3 corn crops, and the largest of those 3 corn crops is their safrinha crop, or their second corn crop, which is being seeded as we speak. Their first corn crop, according to CONAB, which is the equivalent of the USDA in Brazil, had their first corn crop just under 25 million metric tons. Their second corn crop is pegged at a record 86 million metric tons. It is difficult for me today to say that Brazil's going to have a disastrous corn crop when the vast majority of their corn production is in their second corn crop and it's not even in the ground. Now, we anticipate Brazil will have record corn acres in that safrinha crop. As you know, corn prices are strong, so there's strong incentive for the Brazilian producer to plant as many safrinha acres as he can. But there is concerns, will he be able to get all the inputs that he needs to seed that many acres? I do want to point out a 5% below trend yield in Brazil's safrinha corn crop equates to a little over 8 million metric tons of lost production. Now, I think the general feel is we've already lost maybe 2 to 4 million metric tons in Brazil's first corn crop. And how much we lose or gain in the second corn crop is yet to be determined. Argentina corn production pegged at 54 million metric tons. Average trade estimate in tomorrow's report has Argentina corn production at 52.1 million metric tons. I have seen private estimates for Argentina as low as 41 million metric tons. The general feel or consensus is Argentina corn crop is getting smaller. And the theme that I'm starting to paint here is world corn supplies are not getting larger. They're getting smaller. And, you know, if we've lost 2 to 4 million metric tons in Brazil's first corn crop, and you believe the low end of these trade estimates out here, well, you could see where world corn supplies due to reduced production in South America could certainly drop 10 to 15 million metric tons. Ukraine corn situation. Ukraine had a record crop, anticipating record exports out of Ukraine. The thing you need to know about Ukraine corn right now, there is roughly 600 million bushels of unshipped grain in Ukraine. What happens to those bushels should Russia invade Ukraine? You know, will ocean freight companies continue to send ships in there knowing that there's a war? We just don't know. But as long as there's tension there in the Black Sea, that's going to continue to lend support to commodity markets. And we certainly can't afford to have any lost production in South America because we're anticipating world corn exports to be up almost 25 million metric tons at a record 204 million metric tons. And I can paint a picture where world corn exporter stocks to use ratio could drop below 10% with some lost production coming out of South America, which would be at an historically low level. As you know, we've had a tremendous run uh, on old crop futures up there to that 640 level on May. Um, I would point out that our seasonal charts would tell us that old crop futures usually top out about the first week in March. I am a strong proponent of marketing some grain just based on these seasonal patterns. Managed money, funds position, they're long a little over 360,000 corn contracts. Obviously, managed money likes to use commodities as a hedge against inflation, and we certainly have inflation. As long as we have inflation, and as long as we have ideas that maybe South American production is getting smaller, I don't see the managed money liquidating their long positions anytime soon. Corn stocks versus price chart. The red bars are stocks, the blue line is price. Corn stocks, this is where we're pegged at right now today. I've painted a picture here where I don't believe our corn stocks are getting any larger, and I believe that they are getting somewhat smaller. We just don't know how much smaller yet. There are some people in the trade that think our corn stocks can get down to 1.1 to 1.2. What's this tell me? This tells me that corn prices stay well supported. Something that I want you to take away from this chart is these two black lines, $6 and $7. Look at how many opportunities you've had since 2006 to sell corn futures above $6. Those opportunities have not been there all that often. And take it a step further, the opportunities to sell futures above $7 is even less. Keep that in mind as you continue to market your grain and formulate your marketing plans. Moving on to what acres is going to be this spring, there is a wide range of estimates out there. The trading range on soybean acres this spring is anywhere from 87 to 91 million. Corn acres anywhere from 90 to 93 and a half million. Well followed IHS market, which is the former Informa group, they have corn acres at 91.5 million. Current economics don't scream more bean acres, not for a farmer, at least here in the heartland. 190 corn, 550 a bushel, which the farmer could have probably sold that yesterday. 60 bushel beans at $14 bushel beans, it argues corn. So I think soybean price for new crop has a little more work to do. And, corn and beans are going to continue to fight one another here for acres, clear on up into the spring. Trend yield 179 and a half. And if we get 91 and a half million corn acres, and I have demand increasing a little bit next year, and I have our carry out this year dropping to 1.4, you can see there that we still keep our ending stocks at adequate levels, but we're certainly not building stocks. That keeps our ending stocks right here where we're at today. That should continue to remain supportive for new crop futures as well. These seasonal patterns would tell us that if you believe in the seasonal charts, it would tell us the highs aren't in yet for these corn futures. That would tell us that these futures don't usually top out until June. Russia, Ukraine, NATO stalemate. 90% or over 90% of Ukraine's exports pass out or come through this region right down here. What happens should Russia invade Ukraine? I don't have the answers. But yesterday, Biden and the German chancellor, they presented a united front at the press conference. Obviously, NATO is going to impose sanctions that hurts Russia in an economic way. should they choose to invade Ukraine. Definitely the West will lock Russia out of the US dollar. They'll lock them out of the SWIFT banking system, which is the banking system used to facilitate bank wire transfers throughout the world. Russia could still export their grains. They may have difficulty getting paid for it, though. I don't know what happens here. I don't like what I see in the news with this situation. Um, I hope we can find a resolution here that everybody can live with, that doesn't involve an invasion and loss of life. But Putin just doesn't come across to me as the type of person that just picks up his ball and goes home without getting something in return. Now, I'm sure we have some listeners on here this evening that's got very strong and close Ukrainian heritage. And this is one of the downfalls to a virtual meeting, because I'd love to hear their opinions and thoughts about this situation. I recently acquired a fairly large collection of old magazines of various types from the 40s, 50s, and 60s. And I have enjoyed looking at them and reading some of the articles, but I have really enjoyed looking at the advertisements, especially the advertisements that were printed during the war, because they were all tailored to the war and fighting the war effort. I learned that in the 1950s, if you had white wall tires, that made you appear smarter. And the 1963 Chevy Impala was the most comfortable thing since your grandmother's lap, which to me just sounds a little bit creepy. But as I was going through these magazines, it quickly dawned on me that the more things change, the more they stay the same. And there has been a lot of changes over the last 75 to 80 years. The cell phone has replaced the telephone. We no longer open up a can of beer with a can opener. We have removed some faces from some products, and we no longer have sports stars advertise and promote cigarettes and tobacco products. But what I realized was the ads have changed over the years, but the headlines have remained the same. The headlines in the tabloid magazines in the 1950s are the same as the headlines on the tabloid magazines today. In 1947, we were trying to understand the Russians. In 1971, we were concerned about the growth of the Soviet military power. 1956, Afghanistan, wild frontier in the Cold War. 1967, the roots of bitterness in the Middle East. Immigration laws, 1956. 1969, we're turning the Great Lakes into a hopeless sewer. And let's end handouts to the rich. Basketball scandals, can they ever be stopped? 1963. And one of my favorite headlines that I found from the 1947 Saturday Evening Post, football pros must be babied. And here we are, 75 years later, and just a few days away from the Super Bowl, and we still have to baby our professional football players. My point is the headlines today are not a whole lot different than what the headlines were during our parents' and our grandparents' generation. Soybean to carry out pegged at 350 million bushels, carry out to use ratio estimated at 8%. The average trade estimate has soybean ending stocks falling to 316 million bushels in tomorrow's report. The USDA has soybean crush up 2.3% at 2.19 billion bushels. Our cumulative crush through December is right at 750 million bushels. down 2.5 million bushels from a year ago. Our crush Jan through August is going to have to be up 3.7% versus a year ago in order to meet the USDA crush goal. That's only 52 million bushels. And I think that's easily doable. Soybean crush margins are strong clear into the summer months. And a year ago, our soybean crush rate fell off dramatically February forward in anticipation or ideas we were going to have tight soybean stocks. And a year ago, the month of February was brutally cold and our crush rate dropped off dramatically. I think soybean crush will be 20 to 25 million bushels larger than what the current USDA estimate is. And it could be as much as maybe 50 million bushels. Domestic usage of soybean oil here in the United States is estimated to be up 8.1% versus a year ago. And that is simply due to anticipated increase of soybean oil being used for the production of biodiesel or renewable diesel. Renewable diesel has the potential to really change our future acreage mix here in the United States. Now, renewable diesel is a diesel fuel that can be made out of soybean oil or fat, and it has the same properties as diesel fuel that is made out of petroleum, but it is a much cleaner fuel. And this has all arrived from the low carbon fuel standard coming out of California. Our renewable diesel capacity here in the US right now is just under 1 billion gallons. There is, between projects currently under construction and proposed or announced, capacity to take that up to over 5 billion gallons. By 2023 to 2024, our renewable diesel capacity should be somewhere between 2.5 to 3 billion gallons. That has the potential to really change maybe the acreage mix here in the United States. Our soybean crush capacity continues to increase. But the thing you need to take away here is to produce 500 million gallons of renewable diesel, it would take 7 million soybean acres. So maybe some of you have heard out there some analysts projecting that soybean acres may need to be as large as 100 million acres in the next 3 to 4 years. When you hear those claims, this is the driving factor behind it. We are adding crush capacity here in the United States. It seems like almost weekly here lately. Just last week, there was 2 additional crush plants announced in the state of Nebraska. The red or the green and yellow dots are all existing plants, except this one right here, that should be green. The red ones are announced crush facilities that are projected to be built or in the process of being built. And not all of them are on this map. There's one down in, I think, Louisiana or New Orleans area that's proposed to be built as well. But the point is, we are adding crush capacity in a big, big way. One thing that I would point out here about acreage mix, up here in North Dakota, you can see we're adding some crush capacity up there in North Dakota. Well, when I was in the business and growing up in the business, if you lived in North Dakota, you were supposed to grow wheat and grow oats and all these other different crops. And we've been growing more of corn and soybeans. If you're going to build these crush facilities up there, somebody's going to feed it. And so that certainly would argue that you could continue to see corn and soybeans or soybean acres expand up there in North Dakota. U.S. bean exports pegged to be down 9.5%, 2.05 billion bushels. The USDA has our bean exports projected to be down 9.5%, Our soybean export sales are down almost 23% versus a year ago, and our inspections are down almost 24% versus a year ago. And this strictly has to do with China. China's soybean commitments from the U.S. through January are down 23% versus a year ago. Although they still have a pretty good chunk of soybeans on the books. And if you have noticed lately, we have been announcing new soybean sales almost weekly for the past week. China's soybean imports projected to be at a record 100 million metric ton. World soybean usage expected to exceed production by 2.3 million metric ton. And South American soybean crop was pegged at 139 million metric ton in January report. The average trade estimate for tomorrow has that crop dropping down to 133.5 million metric ton. That's 5.5 million metric ton difference between January. Private estimates I have seen as low as 125 million metric ton. Soybean exports pegged at a record 94 million metric ton. One thing I want to point out is the red line here. That is Brazil's domestic usage. Brazil's domestic usage of soybeans does not change much based on production. It stays fairly constant. So if we have some losses in Brazil bean production, it's going to be exports that get hit. And that should move some additional export demand back to the United States. Argentina soybean crop pegged at 46.5, average trade estimate, and tomorrow's report has that crop at 44.3 million metric tons. Paraguay crop pegged at 8.5 million metric tons. Private estimate has that crop as small as 4 to 5 million metric tons. I would point out private estimates out there, I've seen Argentina soy crop as low as 40 million metric tons. We have already lost 9.5 million metric tons of production in South America from the December to the January report. And I just painted a picture here, and just based on the expectations for tomorrow's report, that we could lose another 10 million metric tons of production. That's almost 20 million metric tons of production since December lost in South America. And that's significant. And that crop size down there could be even smaller than what the numbers say tomorrow, because we're anticipating world soybean exports to be up 6 million metric tons at a record 171 million metric tons. And we have record world bean, meal, and oil demand. And we have already world soybean ending stocks and stocks to use ratio falling to the lowest level since 2015-16. And right now, if you look at the combined ending stocks of Argentina, Brazil, and the US, they're already at the lowest level since 15-16. And I certainly anticipate this number here to get smaller after tomorrow's report. World soybean oil stocks to use ratio, record low 5.7%. Other major veg oil stocks to use ratio, also at a record low level. You are going to continue to hear more and more about vegetable oils in the next several years. Old crop beans, water run, up almost $4 from the low this past November. I think the U.S. producer is probably 90% plus sold on old crop soybeans. Managed money, they're long somewhere around 160,000 contracts of soybeans. As long as there's ideas that South American crop is getting smaller and we have inflation, I don't foresee them liquidating their large position anytime soon. Bean stocks versus price chart. This is where our carryout is right now. I could make an argument that our soybean crush number will be anywhere from 20 to maybe even 50 million bushels larger than it's currently projected. I could see, depending on the size of the South American bean crop, where maybe our bean exports could be 100 million bushels larger than currently estimated. The point I'm making here is it looks like this carryout number is getting smaller. And you start increasing our exports to 100 million, another 20 to 50 million for soybean crush, and you're taking this number from 300, down towards this 200 million bushel carryout. What's that mean? That means soybeans continue to stay well supported. Point I want to make about this chart that I want you to take home with you. This black line, $15. Same thing here as I told you with corn. Since 2006, how many opportunities have you had to sell soybean futures at $15? Take it another step up to this $16 level. Those opportunities have been even less. Just keep that in mind as you continue to market your grain. Seasonal patterns would tell us that old crop beans continue to rally on into the summer months. New crop, Forma has bean acres pegged at 87.8 million. Trendline yield at 51.5. And you can see here I've got demand increasing next year from this year. But I'm using here in this example our carry in at 350. I just told you where there's a possibility that could drop to 250 to 200. Should that be the case, well, you can see here our bean ending stocks with 88.8 million acres. Our bean ending stocks would drop from where they're projected out today in that situation. I think new crop soybeans has more work to do to make sure they secure enough acres. You look at this stocks to use chart. I think new crop beans stay well supported, but also keep in mind, we talked about how many opportunities you've had to sell $15 beans and $16 beans. Well, the story's the same. How many opportunities have you had to sell $14 bean futures since 2006? Seasonal patterns would tell us that new crop beans continue to rally and top out there in June, July. And once again, I encourage you to market some bushels just based off of these seasonal patterns. The American worker is burnt out. U.S. unemployment rate at 4%. That is still up from the 3.5% that we seen prior to the COVID pandemic. U.S. labor participation rate at 62.2%. Now that's rallied considerably from the low, but it's still down from the 63.4% we seen prior to the pandemic. I think the U.S. labor market is pretty much at full employment. We just simply lost a certain section from our labor pool through early retirement or two-income family. One parent decided to stay home with the little ones due to daycare issues or whatnot. And I think that there's a percentage of them that simply will never come back into the labor pool. If you think history repeats itself, this chart screams that we are due for a period of higher inflation. And we already have high inflation at 7%. On Thursday, we get a new CPI number. The trade is expecting that number to rise to 7.3%. If you don't think that interest rates can increase dramatically, quickly, just look at this chart. And look what the Fed did back in the late 70s, early 80s to get inflation under control. They increased interest rates quickly and in a very fast manner. I don't think people realize, and personally, I don't realize it either. It's hard for me to really wrap my head around this. But I don't think people fully comprehend the amount of money that has been thrown in the economies throughout the world. Between The central bank liquidity and the injection and the government stimulus packages here in the US, it equated to 44.4% of our GDP. And it wasn't just here in the United States, it was modern economies clear throughout the world. And at the end of the day, it amounted to 28.4% of the world GDP. Just unbelievable the amount of money that has been thrown into the economy, not only here in the US, but throughout the world. I think the Fed's got themselves backed in a corner and they're going to struggle getting out of it. I don't know how you orchestrate a soft landing from all this, but I certainly hope they can figure it out. Bad policy, corporate welfare run amok. Here in the United States, we had a program called Paycheck Protection Program. It was a program designed so employers wouldn't have to lay people off during the pandemic. We loaned out almost $800 billion under that program. So far, almost $675 billion of that has been forgiven. I am still waiting for an answer from my politicians as to why we are forgiving loans to companies and individuals who remain profitable through the pandemic. Now, I'm not picking on this company. This just happens to be a company I'm familiar with. But these examples are everywhere. In 2020, they made almost $6 million. In 2021, they made almost $25 million. In the last 2 years, they made $30 million, yet they got to keep almost $1.7 million in taxpayer money that they did not have to pay back. The employees didn't see those funds. That just trickled down to the shareholders, which continued to add to the divide between the haves and the have-nots. Over here is the average corn farmer in the state of Iowa got over $17,000 in PPP loan. The average soybean farmer got just under $17,000. I showed you when I started out my presentation that farming and agriculture has been pretty good over the last 2 years. Wheat outlook, world wheat production exceeding or usage exceeding production by almost 9 million metric tons. We have world wheat ending stocks falling slightly. U.S. wheat ending stocks at their lowest levels since 2013. Soft red wheat stocks still at historically low levels. World wheat demand continuing to grow, as does world wheat imports. Ukraine, Russia, 29% of the world's wheat exports come out of that Black Sea region. That's important should we have a war break out over there. Major world wheat exporter stocks to use ratios, record low level. Should continue to remain supportive to wheat. Winter wheat area seeded up almost 750,000 acres. Informa has all wheat acres up 1.5 million versus a year ago. And you can see here using Informa's estimates, should we have trend line type wheat yields, we don't really build our wheat ending stocks a whole lot from where they're at, but would still maintain at fairly adequate levels. Wheat, I think $7.50 to $8 is probably pretty decent trading range. And our seasonal charts would tell us that July wheat usually tops out there in February, and Dece wheat usually tops out in Jan, Feb as well.